What is up, everyone? This is Cruz from New Age Wall Street, and what we're going to go ahead and do today is take a look at how to day trade and intraday trade options as if it was like an equity. So we're going to go ahead and simplify it, make it really easy, and I'm going to go ahead and show you how. I already went ahead and made a webinar about this, but it's very long, so I'm going to go ahead and shorten it up and show you that you don't need to know all about the confusing Greeks, spreads, sweeps, things like that. You know, all this terminology. I'm going to go ahead and make it really easy for you to go ahead and start trading options and to know what strike price to go ahead and choose. So let's get to it. Alright guys, so we're going to go ahead and jump right in here, and I'm going to go ahead and use Netflix as an example today, so because that is what I went ahead and traded. So we are going to go ahead and be talking about how to go ahead and pick a strike price and how to intraday trade options as if it was an equity. So a lot of people, go ahead and, think it's really hard because, you have all these fancy, Greeks, that go into options. You don't have to necessarily go ahead and worry too much about that. You don't have to worry about, the sweeps or spread positions and things like that. Just trade it as if it was like an equity, and I'm going to show you how to go ahead and do that. So you have a support line here, right? So my support here for Netflix was right here at 326.13, which you could go ahead and see it did go ahead and respect pretty well here today. Can you see that? So kind of all morning it did go ahead and respect it. And so what I went ahead and did, and when I did the way that you trade this, right, is you're looking at your underline, right? So you pick a ticker and you go ahead and you look for a pattern or a setup that you like on a regular equity, and then once you do go ahead and see that it is going ahead and holding, then you go ahead and you pull up your option chain. And I'm going to go ahead and pull an option chain here, and this is your option chain. This on Thinkorswim, it is a lot more. There's a lot to it. You could have different tickers in here. You could have Amazon or whatever you could look at for the price and whatever as well. But don't mind that. You just put in the one you want to look at, and what you go ahead and see here is in the middle. So you have your ticker right in the middle. You have your strike price, and the strike price is the direction in which you're trying to make your bet that the price is going to go in. So again, it's the bet in the direction that you think the underlying equity is going to go ahead and make a move towards. So if I'm going ahead and I'm seeing this holding here, right? I'm seeing this holding the 326.13. Then what you're going to go ahead and do is pull up your option chain and you look for where 326 would be. So it's going to go ahead and be out right here, right? Now, one thing I do want to go ahead and point out real quick is that on the right you have puts, and basically you're making when you're buying puts, you're making a bet that the stock is going to go ahead and make a move to the downside. So I remember this by saying put down, so like when you put something down. So just something silly like I try to to help myself remember. If it helps someone else, great. On the left you have calls, and I remember this is when you're making a bet when you're buying these to go ahead and for the underlying equity for it to go ahead and make a move to the upside. And I remember it by saying like you call someone up. So some of you younger people may not remember that because, anyways, showing my age here. So, and then right here in the middle, you'll go ahead and have your expiration date. Don't worry about all these other extra expiration dates. You could go ahead and just trade on the week that you're currently in. So it expires this Friday. So don't worry about any of these other ones. Just play these weeklies here for the week that you're currently in. Don't worry about the other ones. So then what I'm going to go ahead and do is, so I'm at 326 is where my support is, if you remember, right? So 326, right? So I'm wanting to make a bet that it's going to go ahead and bounce right here and go up. So the way that you pick a strike price here is you pick the very next strike that is outside the money. So the very next strike would be 327.50. You come over here to the left, since I want it to go up, right? And I go ahead and choose it by clicking on it. So then you're going ahead and then you would go ahead and pick how many contracts you want to go ahead and buy. at that price, and these are the prices, the bid and the ask here. The price per contract here times 100 is how much will go ahead and be held out of your account. Excuse me. So and then that's it. So then what I go ahead and do, right, is I go ahead and I look at my chart, right? So if my chart is right here, then I would go ahead and say, okay, I'm risking off the low of this candle right here at 325.70. So if Netflix breaks this 325.70, then right away I'm going to go ahead and come over here and then sell my contracts that I have. It's because I bought them already, right? So I'm going to go ahead and sell them, for a little bit of a loss. Now, if they go ahead and move up, right? So you're just waiting for the trend to go ahead and move, and say you're reading the tape and you see it start getting slammed here, at the top right here, right, where you see this kind of big candle, to the downside. Then you just go ahead and you go in, and sell it at this, sell your contract on the option chain as well. So you go in here, you choose it, and you go ahead and just press sell. Easy. So you're not going ahead and waiting for a setup on the actual option chain or the option chart. You're playing it exactly the way the pattern would go ahead and be on the equity. So some people do go ahead and ask a lot about the spreads. So that's it's something to go ahead and be mindful of. And with you picking a strike price that is right outside the money, you're going to have enough liquidity in that strike price that you're going to go ahead and be able to get out. Because if you go ahead and you choose a strike price that is too far outside the money, right? So for instance, if you go ahead and you were going to go ahead and choose, say 350, calls, no one is going to go ahead and be trading those because it's way too far. So you're going to have a hard time, getting in and out of there. Whereas, since this is the very next strike price, you're going to be able to get in and out pretty quickly, and you're not gonna have that much slippage because of the spread. So it's just something to go ahead and be mindful. It's something to go ahead and just plan your plan with your trades. But I haven't ran into a problem with it yet. So that is how you go ahead and you choose your strike price, and you go ahead and intraday trade the options as if it was an equity. I made $900 like this here today, guys. It's it's a lot better than trading small caps and having PDT and having all those. Options do go ahead and settle in overnight on the same night, so you have the funds available to go ahead and trade on the next day as well. So but very nice. Thank you for taking the time to go ahead and watch the video. I know I had made a webinar about this that was very long and strung out, over an hour. I wanted to make a video that would go ahead and be a little bit shorter that you could go ahead and take a look at. But make sure that you go ahead and if you have not subscribed to my channel, make sure that you have subscribed and you liked it. You hit the bell so that you get notified when I do go ahead and put more videos out. So you guys have a great rest of your day.